Hello everybody, welcome to another video here on my channel. Today is June 24th. It's Monday. I'm going over the one trade I took today. If you haven't already, feel free to check out my Discord server in the link in the description. I'm going to be doing live trading soon, and I do live charting sessions. So going into the daily, you can see that today has just been a retracement day to take out or to tap into this daily fair value gap. So that's the first thing we want to see. Now to reverse to the downside here, right? Here we took out previous all-time highs, which since the contracts changed, this is not right. So that should be there. So we took up all-time highs a long time ago, all the way back in January. And then obviously took it again. I kind of go over the same stuff every time, but this is the, again, well, these two PD arrays right here, these two dailies. So you have this daily right here and this daily down here. So in this area right here, I want to see us get through this if we want to head lower, right? We have so many bullish PD arrays we got to get through, and I want to see us respect bearish PD arrays. So we also have this daily right here. So that's also nice to see. We did create a daily fair value gap. We're also going to create another one probably right in here. So going into this morning, I had more of a bearish bias. So what is this? 3 a.m. Oh, wait, no, hold on. This was multiple days ago. I forgot how big this time frame is. Okay. So here's all of today's action. Looking at this, if I go to here, you can see before market open we had, let me mark this out. So we had these two lows, sort of relative equal lows. This would be sell side liquidity, and then up here's the top of the range. So this is buy side liquidity. Actually, right here's the top of the range. Okay, so right here we're in a range. You can see we're just going sideways. Usually I'd like to see us have more moves like this, right? But here we've just been going sideways. So I'm not really going to have a real good bias until one of these gets taken out, because we could just chop in this range. Now obviously there's internal action we can look at here. Like if we had an SMT, this is actually like relative equal highs though. These are very close to each other, so I would kind of expect this to get taken. I'll go over that a little bit later. We also do this fair value gap. I'm gonna mark this out too. Okay, so where do we want to go today? My target for today with these two lows right here, because if you're looking at this model right here, this fractal, these are relative equal lows. They're sort of pretty prominent, right? There's obviously this low, but this is not a trend. This actually comes and dips back into discount of this range right here, of this leg. And so these two lows are very, they're pretty strong. We should go down to them. And then obviously right below these lows is the daily fair value gap, which is what that's created from. So I wanted to see these lows get taken. So again, this is the 15-minute. I'm going to go a little further ahead to where I was looking at the market. Now today I didn't decide to trade during market open. I wanted to wait a little bit, but let's go to here. So market open, we actually came down, took out the sell side. So I want to wait for some more structure, but this does show us, whatever reaction we have to here will most likely show us our bias. So after we took this low out, what did we do? Well, out of this fractal right here, we went up to discount. Right after forming this low, we came up to, we came up to premium for shorts. We also respected off these bearish PD arrays. If we look at this entire range though, which is where it's more important, after taking out the low, and keep in mind this is the low of, it also took this low out. But this is the low of this range. We also have this range up here, but this one doesn't really matter too much because we already came up in premium of this range. But just looking a little bit sort of more closer up at this range, I wanted to see us possibly, which what we happened, we retraced, right? This is at market open. I still wasn't watching the market here, but after this retrace, I would expect us to possibly go lower, okay? So we respected this PD array right here. I also want to see if there was a possible SMT at these highs, because if there was, it'd be a really good setup. Let me just find it. Okay, it looks like it was right here. No, we did not have an SMT at these highs. Actually, we did at this part right here. So, looking at these lows, we had an SMT, and that actually, again, pushed us further down. So this would be, what am I doing? This would be SMT TP, okay. And then, if this is SMT TP, this is the first fair value gap that we tap into. So this would have been good. Kind of wish I was present during this time because I would have taken it during this time. But that gets respected. We come down here. We come back up, tap into this fair value gap. So looking at this, this would be first entry. Right, this is the draw of liquidity. We rebounced to, we just barely rebounced to 50%, wicked it, created this SMT, displacement down, tap it to a fair value gap. This would be your first entry to then target this low. This low gets targeted, and then we could possibly get a continuation. We tap up into here, respect it, get a continuation, and this is where we end up going. But now we have this macro, so this macro can possibly reverse price. Right, we have a downtrend, macro hits, time and price. Macro, this should make us reverse to the upside. So this is your reverse. Right here would be your market structure shift. So this is a recent high that was displaced through, showing that we want to change structure. And then after that, we want to wait for a possible tap into a fair value gap. So you can see we sort of have this small one right here. And it does get respected, right? If you were to take this, if I was to take this, I'd probably put my stop at the bottom of this candle. This would be a winning trade right here. I'm just going to put in first entry. And then let's just check this. Oh, actually, this was an SMT right here. This would just make it even better. So then, yeah, like down here, we also had an SMT. This would be a beautiful model to take a long on because we just took out a major low, right? We have displacement up. We just finished a bearish model. Now we're heading into a macro with a bullish SMT. Get displacement up. Here's your first entry. I would be targeting this high right here. I would actually probably first, this would be a little more difficult because we have this previously respected 1 minute. This did get broken through. But let's see if we respect this, if we take out this TP. So yeah, there we go. We take out the TP right here. This would only be the only worrying thing in the trade. But we went through it easily. This would be your take profit. This would, let's check the RR of this trade. So let's say you put that here, put your stop down here. Your risk to reward for a pretty high probable trade would be 1 to 3.73. So if you're to only take these kinds of trades, that's where you're going to be profitable. That's the only kind of new thing you need. If you have all the knowledge, you just need to be disciplined with your trades. Tap into this fair value gap, respect it, we create this high. So we take out this new high. Now we form this SMT. So if we form an SMT this large, personally me, I would not want to look at the 1 minute to see a displacement leg. Right, so for example, we have a massive displacement, or sorry, we have this displacement leg down here. Right, this is a fair value gap that's created, we tap into it. We do still respect it. Here we're respecting it twice. right? 3 times we had lower. So we did respect it there. The only thing is if we look at a 5 minute, you get a little bit better. As this model is now more relative, this SMT is more relative, things are easy to see. You want to see a 5 minute displacement candle. So we have one right here where a fair value gap is created. And then you could see us tap into this 5 minute to then head lower to this SMT TP. So taking this 5 minute, which is this right here, you can see this is actually where I would have this entry in right here. So this could be second entry or first entry. I'm going to put it first entry relative to the 5 minute, but we come up and my entry would not be at the bottom. I would not put it at this part of the fair value gap. And the reason why is because we haven't tapped this 5 minute yet. So obviously at the time we didn't have this 5 minute because the 5 minutes created from this candle right here. But waiting for a 5 minute fair value gap to form, we most likely will come back up to it, which is what happens here, right? You don't want to be in drawdown from here to here. You'd rather only be in a little bit of drawdown from entering into this 5 minute fair value gap and then only being in a little bit of drawdown. Additionally, we also tap discount. So you can think about this 50% area from this high to this low. This 50% area is inside of this fair value gap. So you could also put an entry possibly at 50% right here. This would also be a nice spot because price most likely will go up to that and it will lessen your risk even more. So we come down and take out this SMT TP. And if you look up here, I don't know if this is really a good example. It could be, and the reason I say that is because if you're looking at this part of price, you could see we have a recent high. What happens to the recent high? It gets taken out. We come back lower. Okay, but what do we do after we take out this external high out of this sort of bigger fractal right here? After we take out this external high, we come back up again and we take out this internal high. Right, so we have this internal high that we took out, and from that, this leg coming back up could be manipulating this high. So it comes up, manipulates this high, stopping people out, and after that, we want to head lower. Here's the standard deviation projections, and one of the reasons why this is so good is because, actually, I don't know if I've gotten to that part yet. Oh wait, no, that's the next one. Hold on. Let's look at this one first. So we have this possible manipulation, come back down. We reach 2.5. After we reach 2 to 2.5, we come back up. We retrace to discount of this range. So this model is already working out perfectly. We come back down, take out this SMTTP, and then right here is final possible targets. So this right here is what got me into wanting to take my actual trade that I took today. No, that was further down there. It was very two similar things that happened. So we hit this, and then macro we want to reverse. So we come up, and this is exactly what happens. We reverse to the upside right when the macro hits. Notice it happens right after we create this SMT. We just took out this SMTTP. We hit 3.5 to 4 of the standard deviation. Macro hits. We reverse higher. Right? If you just took an entry, if you just decided to take a long right when we enter this macro, you'd be up a bunch. A lot. You'd be up like almost 100 points. Right, so just watching some more structure here. So after this macro, we get some displacement down here, tap into discount of this range. So either two things can happen here. One, we can just keep going lower, or two, we can keep going higher. The nice thing here is that we have this 1 minute and this 5 minute. This pushes up higher. Also, we have a wick from this 50%, displacement up with a fair value gap. So this is good to go higher, except the only thing that happens is that we form this SMT, and then we're sort of just trickling down. So then we got this. This is going into lunch macro. Usually this macro doesn't really do much. You can see it's just consolidation here. But with this SMT, we do take out this SMT TP before taking this protected high. And even though we had a bearish model right here, since this SMT TP is like not that far down, we can still respect this 1 minute and this 5 minute. You can actually see we have this 1 minute right here. This 1 minute got respected here, and then it actually the second time got respected right there. So now it is possible that this is a little bit of a manipulation lag. Really not that clear. The only reason I say it could be manipulation is because we took out this high. There's really not much. Honestly, to be honest with you, there's not too much. The only reason why I drew this out is because if you draw this out, it aligns perfectly. This 3.5 basically aligns perfectly with this protected right here, which is this protected low. So it just looks nice. This could be a manipulation leg too. It's possible. I don't really know if it is too much. I don't really pay much attention to manipulation legs. They just help with determining or projecting how far a trade's going to go. So after we have this manipulation leg, let me also see there was an SMT created here. Okay, right here. Was there an SMT? No. So I was going to take an entry here. I remember watching this. I should have taken an entry here. This is also a liquidity sweep, which can be sort of like a turtle soup. And turtle soup with manipulation is very strong. So this is possible manipulation. We had lower, respect this 1 minute. Right here could honestly be first entry, but I wouldn't take this because it's really not enough. We're in consolidation. At this moment in time, you don't know that we're going lower. Nobody does. We head down here. We have the second fair value gap that gets respected. And we're just kind of trickling down. And then we hit the 2.5. We don't really go much up after that, but then we hit this 3.5 to 4, and we take out this protected. So now at this time, I'm thinking, okay, well, what happened to this macro before? We went to the macro, right? We just finished standard deviation. It's the same exact repeated thing. We just finished standard deviation, had an internal sweep. Right here, we just finished standard deviation, had this internal sweep, right? Everything seems to be lining good. I also want to check to see if there was an... I don't think there was an SMT at these lows, but I'll just check. No, okay. So right here, after this macro, I wanted to wait for some sort of market structure shift and displacement up. So right here, we enter the macro, and we have this high. So I want to see this high get displaced through. And then right here, we get this massive white candle. This is signifying that we are going to reverse. We go a little higher here. So here's the fair value gap. We have market structure shift and a fair value gap entering this macro. Just got this protected low, finishing standard deviation. All of this was good, except that we do have this liquidity down here. But I did want to expect us to come back up and retrace to discount of this range right here. So out of this range, we just had a massive sell-off. I want to see us come back and retrace to discount. So I have this high up at this. I have my take profit at this high, which is right around where this discount area is. And so I enter right here. I actually enter once this candle closes, just to be safe. I expect us to go back up, respect this macro, but look what happens. I get stopped out. Don't really know why. There's, like, out of so much studying I do, I never see this happen. This is very rare. It just, I took a trade on it and it happened. So I'm not upset about this trade at all. I'm not upset about it, right? Most people would probably take a trade, lose, and be like mad about it. I'm not upset about this trade. It's just something that happens sometimes. But yeah, this macro didn't really get respected. And I sort of think the reason why is because if you look at a higher time frame, the way macros should work is that it's supposed to help you go towards the draw of liquidity, the higher time frame draw of liquidity. Right here, if you're looking at this chart, the draw of liquidity is these lows. So it is a chance that I wanted to go down to these lows. Here's the thing though. If I go a little further, you can see, one second. All right, so right here, we have displacement up. After forming this low, right, the macro did nothing. At the end of this macro, this could possibly be a market structure shift. We tap into this 1 minute, respecting it. I actually don't know what happens here. Come down to this, come back up. Let me see, again, I have not seen any action after this. I've only seen where it goes. I haven't actually seen the individual action. So we have, looking at this internally, we have an SMT right here. This was created after I got stopped out already, but we have this SMT. This would be SMT TP. Let's look for another SMT. Okay, I don't see any other SMTs. So just keep watching. Okay, so right here, notice we're sort of trickling down, right? And you'd expect, if you're, let's say you're in a short position from like right here. Let's say price came up, tap into this 1 minute, and now you're in a short position, which is something that would be kind of noticeable. You have this 1 minute, we come down. Yeah, it doesn't really show much, but let's say you're in a short position. Your targets are obviously these lows. You'll notice we did not even take out these lows. We actually keep going higher, and we keep going higher after that. This is exactly what I was talking about, or what I was thinking about down here. So something I've noticed. Let's say you have a massive downtrend, right? We're clearly downtrending towards these two lines. These two lines is the draw of liquidity. This is a very, very strong draw of liquidity because on the higher time frame, that's these two lows, right? And what I've noticed over time, and you're about to see here, is that when we come down, we're most likely not going to take out these lows from all the way up here. Most likely, we're going to want to create some more internal action, like heading to premium of a range before selling off to take out these lows. Right here, we come very close, but you're going to see we just keep going up. And this move going up is the retracement to discount. So if you take this high right here and this low, let's see where price goes. Price goes to premium. So right here, again, right before we took out this low, and by the way, this is increasing how strong the draw of liquidity is, because now instead of just two lows, now it's three, right? And they're very close together. We just had to retrace the discount, and we're going into a macro. This now would be a really good trade to take out these lows. This is what I was trying to do over here, right? You can see if you took a long right here to target premium, it would work out beautifully. That's what I tried to do here with this macro, right? We had a downtrend, we had a macro coming, we had all these signs that we could possibly go higher and reverse, plus we had market structure shift and a displacement up. This would have been a great place to do it. But I don't know if the universe is against me or what, but did not work. But now we're in premium, entering a macro. So I want to see a low get put in. Here's a low get put in. I want to see us, we didn't actually come back up yet. There's a chance we may not create a low, but actually we created one right here, waiting for us to close below it. There we go. Here's your signal. So right here, we obviously have been in a downtrend, but this is the first time that we actually displace below a low, right? This gives us market structure shift with the fair value gap. A couple ways you could do this here. You could either just take it into this fair value gap right here, which would be good, or you could look for possible retracement to discount and then possibly take your entry like up here. This would be a better risk. That happens, and now from that, this is where I now expect us to just go absolutely straight down to these lows. Just like that. See? Beautifully predicted. If I was actually watching at the market at this time, which I wasn't, I was kind of doing other things, but also this is like right at the end of market. right before the market closes. But this would be beautiful. So today's action was good. Now we're just going to consolidate the whole time, right? Nothing's going to really happen. Action was good today. Well, for the most part, like look at all these models that's worked out, right? You have this massive SMT, with this being the SMT TP that gets taken out. You have this SMT gets taken out. All these models working. After this SMT, you get displacement down, retrace here respected, retrace here respected, right? We also finish standard deviation, enter macro, retrace back up to discount of the range, right? We sell off again, more another possible another model right here, another standard deviation projection. This right here would have been, if action was perfect, we should have came up here. But I honestly believe it's the one trade that I took where action was just deciding not to play out. Because every day in the market, out of like every 5 models, there's going to be one model that won't work. It's just because it's not perfect, right? It's not going to work every time. That's why people can have like an 80% rain weight, but not 100, because 4 out of the 5 times they're going to be taking the exact same model, but it's only going to work 4 out of the 5 times. So here was just one of the times it didn't work. It was just unlucky. But right here, we retrace the discount, right? This would be a beautiful entry right here to then target these lows. That's really all I have for this video. I want to check news for tomorrow, specifically tomorrow. Okay. So, yeah, today we really didn't have any news. We had 130 news. I want to see how that affected the price. Looks like that did like absolutely nothing, but it kind of, it was during my it was like right after my trade. So honestly, this is probably it. This is probably the answer, and this is why it's kind of important to take in consideration news, right? This is the only model that wasn't really working that well. And what I've noticed is that, and what's kind of a fact, is right before news happens, price will not be efficient. Like I'd say 15 minutes before news, price just won't be that efficient. And look, when I took this trade, I took it at 118. News was at 130. This was 13 minutes before news. So that probably would make sense. But yeah, so far with this out of the way, I just went over the market and explained why everything went everywhere where it went. So yeah, that's all I have for this video. Let me of course check this other thing right here. 8:30, we have nice news. 10 a.m. nice. Tomorrow's going to be a good day to trade. Yep, I hope you guys learned something out of this. Again, feel free to check out my Discord community down in the link in the description. I'm going to be doing live trading starting soon. I'm going to get some more members in the Discord and live trading sessions. So hope you guys enjoyed, and I'll see you all in the next one.